So when it comes to returning cash to shareholders, we increased our buyback program by a further 10 million. It's now at 50 million. And on a relative basis for the size of the fund, we're proud to say it's one of the biggest in the sector.
Hello, and thanks for watching Proactive. Joining me is Ross Driver. He's fund manager of the Foresight Solar Fund. Ross, a very good morning. Foresight Solar's interim results proved the resilience of the technology and the strategy. What happened in the first half of the year?
Well, firstly, pleasure to be with you today. So at Foresight Solar, we feel that we've delivered a resilient performance, once again proving solar power's effectiveness as an asset class and showing its potential against a complex macroeconomic backdrop at the moment. Also, during this period, we've faced some of the toughest climatic conditions, or really wet conditions, for the first half of the year in the fund's history, alongside falling power prices as well. So this has really made it quite a challenging backdrop. But despite this, the fund has closed the period only moderately behind its forecast expectations for revenue and EBITDA. Itself was a period of two halves. First quarter was one of the wettest in recorded UK history. The weather did improve from April to June, and with strong operational availability, we're able to improve electricity generation. For the 6 months as a whole, electricity generation closed about 7% under expectations, and that was a considerable improvement on the first 3 months of the year. But overall, we'd say that despite this challenging backdrop in terms of the generation and poor weather, cash distributions themselves were only marginally behind forecasts. So we're well on track to deliver our target 8 pence per share of dividend for 2024, and it's well covered as well.
You started the sale process for the Australian portfolio, Ross. Is there an update to that divestment?
There is, and that's something we're announcing today as well. So divestments are one of 3 main pillars for our capital allocation strategy. We finalised the first part of that with the sale of 50% stake in our Lorca portfolio in Spain just over a year ago. And that's put us in a good position. And we are monitoring the market for conditions in Australia to launch the second part of the programme at the right time. It's also given us the opportunity to use our in-house resources to amplify the portfolio by developing just over 120 megawatts of battery projects to go into that at the same time, and increase its appeal for potential buyers. We've now kicked off that process to sell 4 operational solar assets in Australia, totaling about 170 megawatts. And we expect the process for that to close in the first half of 2025, where we use the proceeds of it to pay down the debt. Once we completed that, the process will also help refocus our efforts on the UK and Europe, where we feel we have an exciting pipeline of growth opportunities for the future.
You can continue to deliver on the fund's capital allocation strategy. Ross, what are the priorities of this approach?
Well, the priorities for both ourselves as manager and the board, the utmost priority has always been to protect shareholder interests and shareholder value in what is a difficult macroeconomic environment at the moment. And to do that, through the capital allocation policy has these 3 main pillars, which is returning cash to shareholders, paying down the variable rate debt, also putting modest amount into investment opportunities to lay the future growth of the fund. So when it comes to returning cash to shareholders, we increased our buyback program by a further 10 million. It's now at 50 million. And on a relative basis for the size of the fund, we're proud to say it's one of the biggest in the sector. And in the first 6 months of the year, between both the dividends paid and the buyback, we've actually returned 38 million to shareholders in combination through that. On the leverage side, we started the second phase of the investment program. It's now underway in Australia, and we'll use the majority of the proceeds from that to pay down debt, where we expect the overall gearing to fall by several percentage points once we've realised that investment as well, which is already coming from a relatively low base, we feel. Thinking to the future, we've doubled our proprietary pipeline with the framework agreement we signed to develop a BESS portfolio of early-stage batteries in Spain. We've now almost 1 gigawatt in total of solar and BESS projects to give us that clear avenue of growth for the future.
Several tailwinds appear to be driving the renewable interest rate sector. Ross, what's next for Foresight Solar?
Well, yes, it's continued to be this journey through an evolving macroeconomic environment, may continue to be challenging, but we see there are plenty of reasons for optimism now. There are interest rate cuts in both the UK and the EU during the summer, offered a positive early signs that the fiscal outlook may be easing. We're already seeing gilt rates in the UK start to come down now in anticipation that there will be further rate cuts. Power prices themselves have become less volatile, and there's more clarity on those and the direction of travel, and that's really important for long-term investors like ourselves. In the UK, the new Labour government set out clear ambitions to grow the economy, whilst at the same time making Britain a clean energy superpower. And renewables will play an important role in that, with a target to triple solar capacity by 2030. So overall, we see the transition to a lower carbon economy as being one of the biggest investment opportunities for a generation. And we're confident that Foresight Solar is very well positioned to capitalise on that.
Well, Ross, I hope you'll keep us posted on any additional progress. Thank you very much for the update today.
Pleasure to be here. Thanks.
That's Ross Driver, Fund Manager of the Foresight Solar Fund.